Well, good afternoon, folks. Hey, it is Shooter. Hey, we are going to go over primary waves, cover a couple charts. Of course, at the end of our presentation, please do review our disclosure. All right, let's jump into this. Now, I'm going to approach it this way. Let me just talk a second about swing trade notes and what I post over the weekend. So when I go through charts, the challenging part is when we're not in a solid uptrend or a solid downtrend. So literally, I can be looking at it the weekend. So if our open doesn't give us the triggers to move long, we don't move long. If the open doesn't give us the triggers to go short, we don't go short. And that's the challenge part about being in the middle of the road. So we're going to cover the major indices, and then we're going to go over what was in swing trade notes last week. Now, the gist of once a symbol finds its way onto my list, it's a candidate for a swing, period. I have different alerts set in different places. I may like 2 different looking setups, sometimes even 3. So once those triggers are hit, then we go towards an entry, and we've mapped out our plan already conceptually of what we're going to do. But now, for example, the Russells, we had posted, a breakdown on the Russells back around 214 here because we were seeing the breakdown coming. And we've now fully pushed down to 196, roughly. If that does not hold, it doesn't look like it's going to at this point. We have a trend resistance bar. I think we've had some continuation because we really have 2 resistance bars here, or trend resistance line. So from this aspect, we've broken above there. So until it gets above this, we can't get bullish. Right? But it does mean we can't chase 50% back with market strength because it is a good candidate, especially if all we do is measure this leg and we're going to look for that 50% back, which is up to about 206. So we're only talking about a $5 move, but it's quick. It won't be anything where there'll be a lot of risk. And where you get your confirmation is a breakout above roughly 203.68, and then you're chasing 206. That's it. Real simple. Nice, clean cut. All right, now I do see a little flight to safety in the Dow. So let's look at that. It came off as much as the Russells did. However, it has a much better structure on the demand zone for a floor here. So, I expect us to be in this range, 409 to 450, 50% back, the assumption of this leg right here, measuring from this point to here, is up back about 424. So same thing kind of applies here. We get above this 417, it targets that 424. Little deeper trade than IWM, but I see that as a potential long. And I'm going there is because when I have market volatility, I tend to go back to my leader. I don't like to play games with small caps or mid caps that you don't have predictable volume. And that's the challenging part in this market. And if you don't understand it, you're actually better off sitting on the sideline. Now, my position size is basically sitting on the sideline because of my unrealized losses within the cash secured puts I hold from a number of positions I put on in January and February. So that's skewing, adding or putting more trades on for me because until that flatlines and I'm back below, basically for the month of March, I'm looking at potentially about a 22% loss. So it's a substantial number because I'm getting hit with those cash secured puts. So that skews my entry in a lot of different things. I have no reason to rush. I've already made my quarter. That said, I like a push into FOMC, and that's really what this video is about. I think we do get a push. I think it plays out like this. We get a push Monday, okay? Then we get a little bit of a pullback into like a turnaround Tuesday. By the close, we've already recovered and we push into FOMC. That's one scenario. The next scenario is we continue to sell money, right? Then we get a reverse turnaround Tuesday where we get a push into Tuesday, and then we dump into the Fed. So those are the 2 outcomes that I see, and that's just from the way the charts look. Because either we get back above this demand zone, specifically in the Dow, around 419. Otherwise, we're just going to cave again. Same thing applies for the SPY, right? We've got this beautiful back test that suggests we could go back to about 581, but this is weak. We're about ready to break above this, so we're going to get a push. Probably we'll get the 382 and it'll cave. That's my perception on where we are because I do, at this point, my bias is we're going into a little bit of a bear market. I do believe that. And only time will tell how deep it's going to be or if it's just going to be this flat. Because common bear markets can be flat. So the way that I see the SPY is that we break back above this 564. Then we got a short target of maybe 569. So about $5. So it is a decent trade. So if we look at this from a 50% back stat, and this is really how simple my mind works when I'm in the challenging market that we are. So I'm really looking at this pullback right here. So I'm looking at a shorter ledge. So 50% back from this ledge. This whole leg is being measured up at the 581. So I'm saying 50% back. Look at just this leg to measure it for 573. Makes a lot more sense to me if we're going to chase it. So what I'm trying to do is just get you prepped for next week. If we play out and we have some FOMO in the markets, it's going to be short-lived. I think we'll run. I think either way, we end up running into the Fed to some degree, unless there's bad news somewhere that I can't identify at this point. That's just sort of my take. All right, let's look at the NASDAQ. Very similar look. This whole leg, we're measuring back to maybe 503. Nice base, nice demand zone here. It's a good spot for a bounce, but it's still shallow. It's weak. So above 481, then we roughly got a shot to chase the 382 up to about 494. $5 to $7 here again. So all four of the indices look the same to me, with the exception, I think we do have a flight to safety into the Dow. I wanted to share that. So let me jump into, and we're going to look at last week's setup. So let's look at the Dollar General Store. On Monday, none of the setups came in because we immediately turned red when the market opened. So everything to me was sort of off the table, but we still made an effort to position those, but we just didn't get any triggers from where I set my entries, what I liked or what I didn't like as an etc. So DG is just sitting there, but it's still done nothing wrong. The setup is still there. So we got a decent push and then we came off. So we did run Monday, right? And we continued, but as the selling pressure increased, we got that buyer exhaustion and gap down. So I was glad I didn't take it, because we would have ended up being stopped out on that anyways with market conditions. Now, lie is completely off the table. I don't like that seller exhaustion there. See that breath there? That to me is very toppy looking, and I can see it coming back down to $22. So it's off the table as far as I'm concerned. It's not on my watch list right now. I've removed it. Oracle was also in primary waves or swing trade notes last weekend, and I noted I like it better down here at 137. Unfortunately, I didn't have an alert down there, so I didn't see that. Right now, for me to chase it, I want to break above this 150.50, and then I'll chase that same structured setup for that target 1 to 156. But I'm going to wait. Nice flag, though. I mean, you could enter now. It's a clean-looking chart right now. And then we also had Adobe, and boy, it just flushed. Bam. We got that one leg. But it is a huge demand zone right 374. I just can't enter it right now. I just can't. Even with the divergence here, I don't think we're done in the indices. So I'm going to have a hard time chasing a name like this with this look to the long side. So even though I have an alert set when it breaks above 444.50, I'm probably still not going to take a dope. That's just my take. It's there. It's on my watch list. So that's what it is. Now, Alta looks really good. I mean, it just blew past. Right now, Alta, for continue to jump in, I want 363.58. And then it's going to really depend on my emotions going into what volume I see where. I see a light market, I'm going to stay out of the long. I want to see some volume, not just in the names, in the overall indices. One reason I have things broken down in different categories is, I can see where we're getting our volume. I want to see the fangs running, because everybody chases the fang. I'm going to Mag 7. Right? So if they're moving, everything else can move. If they're not moving, not everything else is going to move. It's like we have this singular market to some degree, which is really crazy to think that we've come to that in a free market, but we have. There's just too many people controlling the money into these different companies that we have no control over. They're just so much larger than we are. So if they decide they're going to sell, they just can take us out. So the first challenge is not to be on the wrong side of the trade. You're actually better off sitting on the sideline. So that is my take on any longs. We will have the new swing trade notes article out before futures open tomorrow on Sunday. But I wanted to get this out so you guys could look at it and think about where you want to get positioned. Should we get a little bit of a rally into FOMC for next week, and go over those symbols in particular. So that's what I have for this week, folks. Great trading. Until next time.